we still, I hope that's the number that you have on your side. I think we need to give it about 10 more minutes before we can officially start. For the rest of the colleagues who were invited to join us, start at 22 exactly.
Michael, would you maybe just give the team or the group that you are inviting, can you give them a wake-up call to make sure they in fact log on, because of the 12, if it's us, then it really is not going to be very useful.
Okay, thank you. Thank you, Eva. I'd actually sent a reminder. Let me send them again. Thank you.
I'd like us to start. The rest of our colleagues hopefully will join us in due course or in the next 5 or so minutes. So hello everyone, you're all most welcome to today's session, this afternoon session, where we are going to listen in on a study that was undertaken by Uganda Bankers Association in partnership with the Uganda Christian University, with support from FSD Financial Sector Deepening Uganda. My name is Patricia Amito. I'll be your moderator for the afternoon, and we hope to have you with us for the next 1.5 hours. In terms of our program, I will be inviting a representative from FSDU who will give us opening remarks for the session this afternoon. Thereafter, I will also invite one of our partners, or our key partner, that is UCU, Uganda Christian University, who will give us their remarks also on the study, but also position the discussion or the session for what we are yet to hear from the team that undertook the research. Thereafter, I will also have a presentation that will be done on the actual study, the reason why we are here this afternoon. Then we'll have a panel discussion. We have about 4 panelists who I will introduce as and when we get to that session at that time. So without further ado, I would like to invite Joseph Lutuama from FSDU. He's the Director of Programs at FSDU, and we have worked closely with him on the same project. Joseph, you're most welcome to speak to us and give us your opening remarks for the session this afternoon.
It's a pleasure for everyone. Allow me to say good afternoon to all the webinar participants who are logged in. At FSD Uganda, we are very delighted to be part of this initiative. Industry associations like UBA are very critical partners to us, because we do believe that they play a critical role in driving not only financial sector development, but also financial.
Can you mute?
Yeah, good afternoon. Sorry for that. I didn't know that I was actually on mute, but once again, I want to welcome all the webinar participants on behalf of FSD Uganda. And I was saying that we are delighted as FSD Uganda to be a part of this initiative. And I also said that industry associations like the Uganda Bankers Association are critical partners in our endeavors to see that the financial inclusion agenda is promoted and that we have deep and broader markets to serve every Ugandan and to ensure that those who are excluded are brought within the financial inclusion space. Particularly speaking to this particular project, we developed a keen interest in facilitating and promoting partnerships between academia and the industry for one particular reason, because we do believe that these two parties or stakeholders have a lot to benefit from each other and to ultimately benefit the greater good of the industry. We know that research and market development are very critical components to driving the financial inclusion agenda. And industry associations being the custodians of the various sectors, they are at the center of driving the research and market development agenda, because they find themselves in a sweet spot where they can do influence policy and regulation from a government side through their advocacy, but also they can influence industry-based practices through their members. But for all that to happen, the association needs to be grounded in research to be able to generate insights which they can use to engage and influence the various stakeholders. So that's why we developed a keen interest to figure out how do we support these associations to build their research and market development capabilities. But we do recognize that most of the associations, even UBA inclusive, they don't have that well developed research and market development units. Of course, like UBA has done quite a lot in ensuring that they invest in research and development, but we thought that there could be synergies to leverage the research capabilities that academia bring on board, because that's what they do. That's their bread and butter. They churn out research, but they've also trained and developed researchers. So we thought there could be interesting synergies and a symbiosis between these two partners. And that's why we provided a grant to be able to pilot and see how best collaborations between academia and industry could actually work out. And I must say we've learned quite a lot of lessons, and we are keen to continue to supporting academia, integrate with industry, so that they not only bring value to their students, but they also bring value to the financial sector as a whole. So with those few remarks, once again, I want to say that we are glad to be part of this initiative, and we're excited to see whichever way we can contribute towards pushing further the financial inclusion agenda. Thank you, ladies and gentlemen.
Thank you very much, Joseph, for those remarks, and we are very appreciative of the support that we have received from FSDU towards this, and many more that we have in the past and even in the future yet to receive. We are very grateful for this collaboration. And as Joseph mentioned, this is a pilot research. We are piloting a collaboration that FSDU is supporting, where industry associations actually partner with the academia and push out research that can inform policy, that can inform strategy as regards financial inclusion within the country of Uganda. Ladies and gentlemen, as the screen before you reflects, our study this afternoon that we're looking at is really on agent banking services and financial inclusion in Uganda. A case study of Mbarara and Hoima districts. As we all are aware, agent banking as it is a key component to driving financial inclusion in Uganda. since the amendment of the Financial Institutions Act that made provision for agent banking, we have seen growth in very significant areas as regards agent banking. And I hope this afternoon we'll continue to see some of these results and also continue to appreciate why we need to actually support some of these initiatives. As I had mentioned earlier, we on this study worked with the UCU team that was led by Dr. Martin Lwanga, and he's on the call with us. I want to invite him to set the tone for us as we jump into the presentation. They're the key research team that undertook this research, going to the field, undertaking the interviews with the various stakeholders. So Dr. Martin Lwanga, you're welcome to speak to us this afternoon as we wait for the major presentation thereafter.
Thank you very much, Patricia, and good afternoon, everybody. It's a delight. Possibly I should also turn on my video. This moment, I hope I can be seen. Sometimes they're dark, but it's a pleasure to. This is a dream come true that we are able to come to this point. As Joseph has just shared, many times we have a challenge where industries and academia work in isolation, yet the research we do is supposed to benefit industry. It happens a lot outside, and it's also something which we should do more here. And like Joseph has shared, we are very humbled by the contribution which FSD Uganda made so that we could carry out this research. And it has been a learning journey. We have learned a lot on either way. And we hope it is going to open up more doors where universities like ours can do research with various industries. This research is basically supposed to provide insights into the area of agent banking services. It's a new area, really not new globally, but as far as Uganda, it's new. It has exploded. I was one of the late users of it, but have come to realize that it has got a great potential in revolutionizing the banking industry, and yes, so in helping many customers, in increasing business growth. So I think many of us, from a bank, from a customer, from an agent, would be interested in what are some of the insights a study of this nature can bring out. The information which we are going to share, or which we found, is of an applied nature. It is supposed to see where can we tweak. I don't want to really point out some of the findings, but you'll find that there are many areas which can provide a learning point for those of you who are in the industry, from a commercial banking aspect, from a customer side, and also from the agent banking. So I think, other than preempt the findings, I'll stop here, and I'll look forward to all kinds of questions from you. Thank you very much. Over, back to you, Patricia.
Thank you, Martin. Thank you for all the support that you rendered towards this research, and the support team that you worked with also. We are really grateful to them. At this point, ladies and gentlemen, allow me to invite the Director of Strategy and Innovation at UBA, Eva Sewagude, who will walk us through the presentation as regards agent banking services and financial inclusion, the study that was undertaken in Mbarara and Hoima districts. And I invite you to listen in, and please note down if you have any clarifications you might need as she speaks or as she presents. Please note that down. There's a whole session on Q&A where we'll have some of these questions answered. At this point, Eva, you're most welcome to take us through the presentation.
Thank you, Patricia, and good morning. Good afternoon, everyone. It's nice to be with you this afternoon to be able to go through the research and the report that has been positioned at this particular point, as well as introduced by Dr. Martin Nwanga. This study was started in 2020, just after the lockdown. So you'll see nuances of the lockdown and effectively be able to understand the impact of a pandemic on a society, especially when we're trying to look at financial inclusion. Sorry, I'm just taking a minute because I'm trying to move my screen. Okay, here we are. This study was supposed to do a couple of things. One, it was supposed to see or create a linkage between financial inclusion as well as agent banking, to be able to see agent banking, what sort of impact agent banking had on financial inclusion, and to be able to see what sort of things we may be able to do to be able to improve the landscape as it is. Now, looking at the FinScope study, 78% of Ugandans are financially excluded, meaning that they don't have access to formal financial services, or, I mean, the 22% do not have access to formal financial inclusion or do not use the services such as they are. And further, the study showed that of the guys or the population which is financially excluded, the bulk of it lives in the rural areas. So you will find that the bigger number of the ones who are financially excluded do not live within the urban areas. And even if you're looking at the eastern region, that most of them live outside of the bigger towns like Mbale or Tororo or Soroti. So there's been an improvement over the years when financial inclusion was taken as an agenda. So from 57% in 2006 to 78% in 2008. We're expecting that now inclusion is much further, but it was set aside or set back during the lockdown period and soon after. But there's been progress, but there's still a lot of work to be done to make sure that every adult in Uganda has access to and uses financial services. So I think this background has already been positioned. In terms of 2018, we, as Uganda Bankers Association, got into a partnership with a company called Eclectics to put together a platform, which is a shared agent banking platform. The purpose of this platform would allow all financial institutions to be able to use that system to have agents to be able to serve all customers across the network. Effectively, if I have an agent who can serve 10 banks, I can go to that agent without a requirement for me to go to a particular bank. This was a significant changer, because looking at bank branches, we had maybe an odd 200 or 300 branches. Suddenly, we have an extra 20,000 agents, which means we are able to serve suddenly our customers from a platform of about 30,000 locations across the country. So the benefit that the customers had, or which agent banking brought, was you wouldn't need to travel the long distances. Taking an east as an example, the Eastern Uganda in the Far East, they have branches in Kotido and Moroto. So the whole of Karamoja area would have to travel to that too, or not be banked at all. If you go to the West, you found some areas where there's no branch or only one branch. So you had long distances being removed. The cost associated with movement or operating branches was also removed. So you don't need to have a branch in 20,000 areas. We just need to have branches in a few and then agents spread over the country. Now, the inconvenience of time and cost. I mean, if I'm going to sit into a bus to take me to Soroti, if I've traveled 30 or 80 kilometers, that has gone away to maybe a kilometer, sometimes 10. And of course, the high transaction costs associated with running those branches. Now with agent banking, that was removed, and that was effectively the purpose of it. Now, these are the objectives of the study. We wanted to see what the status of uptake was. Now, have they started opening accounts, but also their usage? And in terms of usage, do they have the accounts? Are they saving? Are they borrowing? And do they have some sort of product like an insurance? So that is their usage. Now, we wanted to also look at opportunities to extend the service and see how much further we can be able to go, and then identify areas of improvement. What are sort of areas we can be able to do better? And I think these are some of the recommendations which were alluded to and will be spoken to later. And then the last one which came in was to try to see what was the impact of coronavirus or COVID-19 on the agent marketing or the uptake thereof in those particular areas. Now, when you look at this particular slide, what it is showing you is the effect of COVID-19. I'd like you to just draw your attention to 2020, specifically in Q2 when we had the lockdown. You can see that removing that particular drop, we've had a consistent growth of transactions, a consistent growth of agents, but in that particular month, which is May, June of 2020, we saw transactions drop significantly by more than 90%. And this showed that the system itself was vulnerable to pandemics as it was to limited movement, because the system requires a person-to-person touch. But as you can see on this graph, there's a consistent growth in transactions, in volume, in value, as well as agent activity throughout the whole period when the system started very low and tracked positively, with the exceptions during the lockdown period. But other than that, you'll see that, and I think you only see Q4 in 2021, there was a dip, but generally you see a southern and northern movement in terms of improvement of the transactions. So this slide is supposed to show, yes, activity is going up, volume is going up, value is going up, as well as agent activity. Moving on, I'll briefly talk to you about the methodology or way in which the data was collected. A study was done in the districts of Mbarara and Hoima. We wanted to see what was happening in Western Uganda. Now, looking at data, you'll find that about 23% of transactions of agent marketing happen in the West. Now, I wanted to compare two districts, Mbarara and Hoima. They have different activity. One is much larger in expanse, but had lower transactions. That one is smaller, but with a higher transaction. And so we collected data directly by speaking to the agents, by speaking to customers, and speaking by with the bank managers to be able to find out which products do you use, how do you use them, what are the challenges you have, what are the benefits, how effective is it, what more do you want to be done, and so forth. So those were different areas in which primary data was collected, and of course from the agent banking company, which was very instrumental in the study. So secondary data was gotten, secondary means data which was already available, was gotten from ABC in terms of the transactions, in terms of the periods, the location of agents, any feedback or complaints or compliments coming from the agents, from the customers, issues with the system, and so forth. Now, when you look at the table at the end, you kind of see in terms of the number of agents, the percentage of the agents, Mbarara has about 69%, despite being smaller in terms of geographical region. By far, it's less than half of Hoima, but it has more agents. And if you're looking at the population, still Mbarara is lower, but you're going to see that the transactions are much higher in that region. Now, I think let's just look, this is a kind of busy slide, but you're going to see that, let's look at the first graph, which is looking at volume and value. You see a consistent increase of both the value and volume. So it's just a number, but also the amounts of money going through per transaction are higher. You'll see that in the two, if we do a comparison between Mbarara and Hoima, you'll see that Mbarara, in terms of active agents, has a higher number of active agents and has a higher number of transactions in terms of volume and value. But Hoima had, in terms of count, had a much number of transactions per agent, which means that though they had a smaller number of agents, they had a significantly higher number of transactions for each agent. Now, both of them, you can see on the next graph, the active and total number of agents in terms of percentages. Mbarara had a higher number of active agents, but as you can see consistently, the number is going up in any case. So this is just supposed to show and answer that question. Is the usage higher? Is the transactions higher? A number of agents higher? I think this slide gives us that view and confirms that in fact they are higher. This slide is looking at the services offered. In the beginning, when the platform was put into place, basically we looked at which sort of services are available, and the focus was more on beginning in terms of cash deposits and cash withdrawals. Now, the agent banking system has now built, or the shared agent banking system has now increased the number of services. Despite the number of services increasing, when you look at the graphs, you can see that cash, as expected in Uganda, is still king. 95% are deposits, 48% are withdrawals. We have school fees payments. Those are the three drivers in terms of services offered. However, there are lots of other services about inquiry, about utility payments, URA, funds transfers, and so forth. So you will find that agents are aware of the services, but need to drive their utilization, because you will find people migrating or going to branches to do services which are already available on the agent banking platform. A question was asked to the agent, what will motivate the agent? And we have a representative now, I think, who will be able to speak more on it on the panel. But what effectively motivates an agent to be able to start serving customers and joining as an agent or doing this business of agency banking? Well, obviously the biggest one was transaction fee, which is income. It's a business, so obviously that was a driver. But a lot of them ran agency as part of a shop, so they wanted to bring more people to their shops or to their premises. You found others who thought about customers asking, why is it there an agency? Why aren't you doing agency banking? Some of them wanted an association with the banking sector. So there are lots of other reasons. Some enjoyed recognition, some of them enjoyed the experience. So there are really various reasons. And by understanding what motivates agents, it enables ABC and the banking sector to be able to work towards providing that motivation to ensure that they keep on driving the product and that financial exclusion can keep on growing across the unserved areas at this particular point. Now, the biggest benefits that the customers saw in agents banking is to be able to access a service in a community. I can walk a couple of meters, I can walk 2 kilometers without going for 100 to be able to access a service. I can go anytime. I can be able to get my service without a lot of queue I would find in the banks. And then ultimately, it's a cheaper option of managing my account transactional wise than I would when I'm going through the bank. So this slide is talking about the services offered on the platform, but also what sort of feedback we have from the customers in respect to the services that are being offered. Now, these are some of the findings and recommendations from the agents. Remember, the discussion was gotten between primary data with the customers. So we have their feedback on slide 1 with the agents. We have the feedback on this slide, and you'll be able to pick the nuances out of ABC as well as the bank managers as we move forward in terms of recommendations. The findings showed that one of the biggest challenges is a poor network. The network gets off, it gets intermittent, and this was worse in some of the areas which are farther than the ones which are in the main town. We found system failures or intermittency as a problem, where you go to a system and it's not available, it's off, please come back, and so forth. Sometimes the speed of service was very low, of course, as a result of the system as well as the network. Sometimes the agents are not liquid. I think a lot of people who use the system will be able to tell you, when you go to an agent and says, I don't have enough money, come back again, wait for someone to deposit. So there's always a problem. Sometimes service points are very far. If you look at the network of agent banking today, you'll find that most of it is clustered around the bigger towns. And in this study between Mbarara and Hoima, you found that most of them were still clustered around those big towns. And the district spread is not as good as we aspire it to be. And of course, the cost is associated by how far your agent will be. If you're in Kampala, you can walk just a couple of meters. If you're in Mbarara, a couple of meters. But out of Mbarara, you'll find that distances are much longer. So what factors are affecting the agent banking? Well, we have spoken about them, but you find a couple of them which come is some communities who have not accessed the banking system. You'll find that the demand is very low. Some of them spoke about stability of power or lack of. There are peak periods where there's a lot of activity and others where there's hardly any. and so forth. So we asked the agents what sort of recommendations they would have that would make agent banking more effective. And the biggest one was stability of network. And this was affected by the backbone in terms of the fiber, but as well as the system itself. And I think ABC has gone a long way in improving this one, but they still need to go a bit further to ensure that. Some spoke about reducing charges, but you'll see a lot of the problems were really not spoken to commonly, apart from the one of the system stability and then reducing charges. When charges go down, customers can be able to access the service easier. And some agents thought that that would put more money in their pocket, but also increase inclusion if the transactions are going to be lower, the charges on those transactions. Two other issues which I need to speak about here is sensitizing customers. And I think you'll see this coming through in the recommendations, for them to protect themselves and their money, because any customer who gets a problem with the system in terms of fraud would distrust the system rather than what happened at it. And of course, they need to train agents. Agents change, their employees change all the time. So there's a need for them to keep on being trained to understand what's happening, how to protect themselves and their customers, and so forth. The next slide is going to talk about risks and challenges. The biggest one, and I'm sure all of you have heard about it, is the theft of cash and the threat to life of the agents. A lot of agents, especially those out of the main towns, experience, in many cases, even in the middle of town, a threat. People come and try to steal money or steal it and put their lives at risk. So agents have reacted by being fearful of dealing with a lot of money and will turn it away, need to go to the bank so often, increasing their cost of operation. And many of them ended up having to close early to simply make sure that by the time they close, the banks are open, deposit their cash, and keep themselves safe. There are other operational issues associated with fraud. Some of them have been targeted by fraudsters, but you find others in terms of they don't have adequate training, they don't have sufficient liquidity, depending upon where you are, and so forth. Now, certain measures were discussed between the agents, branch managers, and the ABC. What sort of things can be done to be able to avert the risk associated with agent banking? The first is closing early, which was not really a solution in and of itself, but sometimes it protects life and protects money or resources. Keeping money as float and not as cash, which means that you increase your costs associated with disposal of cash. Employing security and the use of security cameras, which increases your cost, but at least keeps you safer. Taking cash to the bank, this was a challenge depending upon your location. And obviously the management of customers, how do you manage them? How do you communicate with them? How do you get them to come earlier and to change their activity as much as possible to be able to keep them and yourself safe? We asked the customers what sort of challenges they had. On the whole, customers were very happy and very satisfied with the service. However, despite their satisfaction, we asked what sort of things can be done to improve your experience and make you feel safer ultimately. As expected, the biggest one was the issue of an unstable network. If a network was stable and consistent, it would make their transactions easier. You don't have to go 4 times or 3 times, and the service is available as is expected. Now, in some cases, there was an issue of low liquidity, where when you need to do transactions, they don't have liquidity. System issues, some of them thought some of the charges were higher and needed to be revisited. And some of the services they'd asked for were not available. Now, I must make a rejoinder at this particular point. The services have increased, but also the awareness of the services. Those two really did affect that response rate, but still, it's still a very low response. Now, looking at what sort of things to improve, this was already a result of the problems. Improve the system, improve stability, offer some services like loans. There's a call for loans, and this is really a fundamental aspect of financial inclusion, if people can borrow and access credit. So there was a call for it to be available. There was a need to reduce charges. I spoke about this one a bit earlier, but a few other issues: allow non-registered users, increasing the number of agents. This one was surprised that the call was still very low, because in some of the areas, the accessibility or number of agents is still very low and far between. But if we would be able to spread the services further and be able to increase the number of agents and keep them happy to be able to sustainably serve customers, I think this would work to answer the question of financial inclusion. This slide really is one which is, I'll just spend just 1 minute on it, but what I was trying to see, what was the impact of COVID-19 and what are the kind of things that happened? You find on the bottom left hand, you'll find that 68% the business is just about closed. Some of them came up and operated, some of them just never did that. There was extremely low sales as expected. Lack of movement, lack of business, lack of money, need to focus on the activities of the day. Now, which services were mostly affected? There were cash-related services or any service which required the movement of cash. That one went significantly lower. We asked the customers what were their responses during that time. The bulk of them said, well, they simply waited for that network to come back up before. Some of them used the branches or banks. For those ones who were able, they used mobile banking. Some of them used online banking. So during that period, you'll see that digital options became more prevalent or available in the banking system. So that one offered customers a bit of an offer, an opportunity as well. But in the rural areas where people were not aware, did not have access to the like, they simply sat and waited for the system to come up. So the biggest impact was that the bulk of operations went down. That's why you saw a more than 90% drop. Shorter hours of operation, obviously, because of lockdown, and then lower demand for services, things like payment of utilities, payment of school fees, obviously, movement of cash and those kind of things significantly went down because there was no demand for it, or even the supply then became, resultantly just simply went down significantly. Now, there were some revelations, additional revelations from the study. There was a question as to employment of women. Has it improved? We saw that the number of employees or business, and business owners who are women was higher. So by looking at how many employees were female and how many employees, business owners were female, you could see the impact of agent banking on the minorities. Has agent banking helped SFIs is supervised financial institutions? Has it helped the banks or the microfinance to increase the number of accounts and activity? Yes, it does, because people who are not easy to reach can be reached. They can be able to open their accounts. They can be able to transact. So here you'll be able to see, this slide speaks about financial inclusion. How can it change and how can it be redefined? What sort of aspects can be increased and what sort of things can be done to enable, to increase activity and to be able to serve better? For example, if money is going to be distributed, to be able, parish development model as an example, the agent banking system can be able to help to do that. It can take money further, it can ensure collections easier, it can be able to be a representative model in the far-to-reach areas rather than the reliance of the formal brick and mortar branches as you would. So agent bank is going to answer certain questions of financial inclusion. Can we be able to bank? Yes. Can we open accounts? Yes. Can we be able to access and deposit our money? Yes, we can. Can we be able to borrow? Yes, we can. Can we? And that is the answer of inclusion by extending further into the far-to-reach areas. Now, I'm going to close by looking at the recommendations from the study. And when I go through them, you'll be able to understand or see the link between the recommendations based on the data that has come through. Currently, the regulations for agent banking do not allow for lower tier financial institutions to join the agent banking platform. It is important that the regulations evolve and allow this, because if it's going to disaggregate a bigger part of the community or our environmental population, then it may not be able to achieve what it should be able to achieve. So our recommendation is to amend the regulation and allow the lower tier institutions to be able to join tier 3, tier 4, and so forth. Now, there was a recommendation requiring, now different banks offer different services. Consequently, an agent needs to be able to sell different bank products to different customers at different times. So their ability to do it is very complicated. So if they were standardized, it would be able to help. Now, the backbone of agency banking is both the system and internet connectivity. Upcountry where internet is poor and the fiber is not good, the services are as good as the internet, and obviously everything else will flow. So there's a need to improve the internet connectivity, but I'm sure you've had this in lots of discussions with the relevant ministry, with improvement of lots of sectors and so forth. They're reliant on the fiber, taking the extra mile into the far to rich areas. There's a need to train agents all the time. The agents and their employees change. New employees, if not changed, cannot be able to support the growth or answer customers in a way or provide them with information to protect them. There's a need to scale up super agents, which is the 5th recommendation. Now, you have an agent and then you have a super agent. So where you don't have a lot of branches, if you had a super agent, it means the agents can clear through the super agent, and the super agents would have a bigger float. So there'd be like many branches. So if you had several super agents in different areas, it would enable with issues of float and remove the need to travel to larger branches. So those are the first 5 recommendations. Secondly, there's a recommendation by law now that you must take a physical receipt. You must have, the POS machine must have a physical receipt, which constrains technology as it's advancing. For example, if I have an app, mobile money as an example, I can be able to do any transaction and get a message, which is proof of receipt. Not that case in agent bank. So everyone has to change, because it will decrease the cost, the need for paper, the need for those kind of apps. So we can be able to progress and be able to have proof that people can be able to have of any transaction. There's a need for customer awareness in respect of digital diligence. Digital awareness is different from customer awareness. Digital is being aware as to what your device can do, what you should be aware of, how you can be targeted, what you can be able to provide, and so forth. Sometimes we lose money or resources based on naivety or lack of knowledge. So there's a need for us to be digitally aware, but also to train our customers, our agents, and so forth. As a sector, we have got to incentivize agents. Their biggest need or ask or motivator is to be able to make more income, to find ways to incentivize them, to increase their take home, to make the business profitable for them to do. Because if you're in an area where transactions are very low, you don't make much of a markup, you generally will simply close shop because it doesn't make sense at all. There's a need for ABC, which is an agent banking company, to collaborate to combat the risks associated with theft of cash. We've had problems of theft in respect to the customers who've been taken for a ride, agents who've been taken for a ride. Sometimes the banks have been targeted by fraudsters. If we collaborate with everyone in the ecosystem to improve communication, improve how we transport cash, improve insurance at a very low cost and so forth, all those things will be able to improve how we work or how we intervene or interface and improve the uptake of agency banking. Okay. I think, Patricia, I think my job is done. Thank you, ladies and gentlemen, for listening to me. And I'll hand it back to Patricia.
Thank you so much, Eva, for the very detailed presentation. You may not see us, but I'm sure we can clap in our hearts and as where we are. Thank you very much, Eva. Ladies and gentlemen, the presentation as well as the detailed report will be sent or shared with you right after this session this afternoon. I see there was a question about that on the chat. Also, I think there was a question about are there other studies happening in other districts? This was a pilot study that we undertook in the Western, and you might be asking why the Western. So in terms of the geographical distribution or representation of agents by region, data that we have from FBC Agent Banking Company, the regions that have the most agents were Central as well as Western, with the list being the East and North. North was at about 7%. So we decided to undertake a study in the Western. I think you've heard from the presentation, yes, the agents may be many, but it also, if you deep dive into that, you'll find that most of the agents are maybe in the urban and not in the rural of the rural. But that's and we hope this study will trickle or cause an opportunity for similar such studies to be undertaken in other districts as well. So from what we've heard, that's the study, and we have a team of panelists. There might be highlights, findings, recommendations that you've had from Eva's presentation that you probably are in agreement with. Some you might not be in agreement with. Some you might want to add some additional knowledge to, which we want to get into right now. We have 4 panelists who are with us this afternoon. The rest of our audience will have a session also with you right after the panelists, but I want to give opportunity to the 4 panelists that we have with us. We have a gentleman from Ministry of Finance who has joined us this afternoon, Mr. Bob Munene. He's a principal economist at the Ministry of Finance, where he's been for the last 13 years. And he's been very instrumental in some of the projects or programs that have been undertaken or implemented through the Ministry of Finance, such as the Youth Livelihood Program. He's also been part of the team that came up with the NPS, National Payment System Act. So Mr. Bob Munene, you're most welcome. I will invite each and every panelist. Once I call out your name, I'll request that you turn on your camera and also switch on your mic so that you can speak to us. To Mr. Bob, we have also a lady from the Uganda Microfinance Regulatory Authority, Ms. Patricia Ahumuza. She's with the Directorate of Supervision, specifically under compliance, the Compliance Division. She's been with UMRA since it started. Maybe Patricia, as you speak, you'll tell us how many years those are. But you're most welcome, and she's very passionate about empowering the disadvantaged, particularly the women and the youth. And as she mentioned to me as we were speaking, she said, I am a practicing Christian. Patricia, you're most welcome. We're happy to have you with us this afternoon. We also have Mr. Benon Bahemuka. Mr. Benon Bahemuka is the president of the Agent Association. Yes, there has been a recent development where an association of bank agents has been registered fully at the URSB, Uganda Registration Services Bureau. And we're happy to have the president himself join us as a panelist this afternoon. Our last panelist will be Mr. Mike Ombusa, who's the head of channels at Agent Banking Company. Agent Banking Company has also recently been licensed by the Central Bank as a PSP, payment service provider. So Mike Ombusa, you're also most welcome to us to speak to us this afternoon. So just quickly, I want to start off by inviting our representative, Mr. Bob from Ministry of Finance, to give us his input, his reflections on what he has so far had from the study, areas of improvement, areas that need to be addressed if we are to actually take the full benefit of the agent banking services that are currently on our market. So over to you, Bob, please.
Thank you, and good afternoon. What I can say is that we welcome this study, and the recommendations are much appreciated. These are the issues that all of us, the stakeholders, have to address if we are to achieve the critical objectives of access and the usage of informal financial services. In regard to the Ministry of Finance, in cooperation with Bank of Uganda, we are reviewing the Financial Institutions Act and the statutory instruments of operationalizing the agency banking to make sure that other obstacles are addressed. The findings are presented here are vital in our review process, and they will form part of our areas are taken into consideration. On the other hand, government is implementing the financial inclusion strategy where we are striving to achieve the following: to reduce the financial exclusion and access barriers to financial services, develop the credit infrastructure for growth, build the digital infrastructure for efficiency, deepen and broaden formal savings, investment, and insurance usage. And lastly, to empower and protect individuals with enhanced financial capability. It is from this effective functioning of the agency banking framework and other financial inclusion initiatives that we can achieve great levels of financial inclusion in this country. Therefore, such studies like this one informs us of any shortfall and the need for improvement that are necessary. We recommend our colleagues at UCU and the Financial Sector Development Uganda for this initiative. Additionally, the financial sector development strategy is aiming at leveraging the financial sector inherent potential to support accelerated and inclusive economic growth and transformation. Under Ministry of Finance and other stakeholders, as you are aware, we developed the financial sector development strategy, which is a holistic strategy for creating a robust and well-connected financial sector that enhances synergies of efforts pertinent to optimizing the financial sector contribution towards realizing Uganda's growth and development aspiration, on focusing on achieving 3 objectives, mainly financial services for all, financial services for markets, and financial services for growth. In conclusion, we welcome these findings and the recommendation of this study and the recommendation of this study. It's critical actually that the issues that as policymakers we ought to address to promote financial inclusion. I thank you.
Nene, for your submission. We've taken note of the input in terms of the ministry is currently reviewing the Financial Institutions Act to ensure some of the obstacles under agent banking are addressed. We also take note of the NIFIS strategy. The initial one that was launched in 2017-18 is coming to an end, and I'm sure the development of the next one is underway. And we also take note of the update on the FSD strategy. Thank you very much for that submission. Allow me to invite Ms. Patricia Muza from the Uganda Microfinance Regulatory Authority to also give us her insights, her reflections, contributions towards the presentation that has been made so far. Patricia, please unmute your mic and then speak to us with your camera on.
Good afternoon, everybody.
Good afternoon, Patricia.
Thank you very much, Eve, for the presentation, and thank you, Patricia, for moderating. I started working with UMRA in 2017. That's when UMRA started. I'm part of the pioneer staff in this institution, great institution that came into place to operationalize the Tier 4 money lenders and the act, basically. You have had a chance of going through the tiered financial space. You will know that Tier 4 is now regulated by Uganda Microfinance Regulatory Authority, where we have SACCOs, non-deposit taking, or the credit-only institutions. We have money lenders, we have village savings groups, basically all those financial institutions that are not tiered or regulated by the Bank of Uganda. They directly fall under our mandate. So yes, I have been part of operationalizing that act, and I am proud because of the milestones that we have hit. Thus far, we have managed to license over 1,000 money lenders, about 400 credit only or non-deposit taking financial institutions. We have SACCOs, but for SACCOs, we take it slow because their regulations have since been recently been passed. So it's all good. So back to the presentation. Thank you again, FSDU, for supporting this research. What I have picked out from it is, in as much as they chose these two districts, Mbarara and Hoima, I think the findings don't deviate much from these other urban areas that we have. However, my question would be, if, I don't know if Eve will be taking questions today, do these people of, if you are in the urban area, how much limit do these agency banking agents have? Because SACCOs, for example, have branches all over, let's say Mbarara. There are some areas in Mbarara where there's no bank, and yet their SACCOs receive deposits. And these SACCOs have a limit. So most of this money has to be taken to, for example, a bank. So in your findings, did you find out whether these agents have a certain cash limit? Because our branches have limits and they cannot stay with this money. So they have to take it somewhere. And then two, these agents are only situated in places that have both electricity and internet. What happens to the far to reach areas? For example, deep in Ruindi, for example, if there's an agent, what happens? Because there's not many, most recently we have seen that most banks are pulling out of all upcountry areas and they prefer to use agents. So what happens in areas where there's low reach of internet and maybe a lot of power fluctuations? However, the findings are only speaking to, like your report said, the top tier, and you want the lower tiers to get.
Patricia, I think that you've muted yourself.
Oh, no, somebody must have muted it. Sorry about that. Can you hear me now?
Yes, now we can hear you.
Yes, I was saying that most of our financial institutions are not digital. So for them to be onboarded onto agency banking is a lot of intervention that will be required, both technologically and also, you know, to train these people to know what to do when they get onto these platforms. Otherwise, we appreciate the research, and we hope that it can be expanded to other districts to try and get a feel of what happens in, say, Kabong or Nakapiripirit, about agency banking and how it's impacting on financial inclusion, because that is one of our objectives or mandate as UMRA, because Tier 4 institutions serve the bigger part of the population in Uganda. If you look at the financial capability survey that was done by POU, you find that a very huge percentage of Ugandans use circles, they use self-help groups, they access finance in credit-only institutions because they have footprint in most of these areas. So I thank you for the presentation, and we hope that as we continue to deliberate, we can pick areas or gaps that can be addressed both at the upper tier or across the financial tiers. Thank you very much.
Thank you, Patricia, for your submission. The good news is that we have Michael Mbusa and Benon on this call, as well as the rest of the team. I'm sure as they speak, some of these questions you've raised as regards cash limits and areas where they are challenged with electricity and power fluctuations, they'll speak to what usually happens on that end. I have Benon to speak to us. Christopher Sengendo has posted, I think, some submission on the chat. As part of the risk management, specifically to do with insurance, an insurance product was developed and approved by the regulator ERA, Insurance Regulatory Authority, and they're at a stage of implementation of the same to support the drive for urgent banking services uptake. Thank you, Christopher, for that submission. Benon, you're most welcome to speak to us. You are the representative for the agents. I'm sure I will hear some of the experiences that you have been able to listen to, even go through. So please speak to us, Benon. Please unmute your mic.
Thank you much, Patricia. I hope you're hearing me. As you have
Yes,
heard, my name is Ben Bayemuka. I'm a retired banker. I think I know more banking or I'm more of a banker than anything else. I'm an agent, and recently we have been having challenges as agents, and the main challenge that we have been having is that we do not have a voice. So these banks, the banks will do whatever they want, and because we are not united, we will not have a voice, you would find it very hard to deal with these banks. You know, when you are not united, when you don't have a voice, it is hard to deal with these institutions and government. So recently we formed an association. It is still new. We have just started recruiting members, but we hope this association will help us. We work as a voice for the agents, and we shall be able to address some of the issues that we have with the banks. Of course, the association is not only for working for the interests of the agents, but also have work for the interests of the banks that we represent, because we agents also have got our own issues, and I think banks have issues also with agents. Some of us are fraudulent, some of us are not following the regulations. The staff that we employ, the type of caliber of staff that we do employ, you find banks having challenges also with us. Now, what motivates an agent? Definitely, an agent wants to make money. That's the motivation number one. But there are concerns and worries about this agent banking. Much as agent banking has been growing, there are some reservations, and people or some agents there's some uncertainty among the agents about the future of agency banking. Because banks, banks differently, the commercial banks, their motive is the same motive as the agent's motive. Their motive is to make money. Much as they are promoting agency banking to serve their customers and to help them recruit more customers, but you find their motive is the same as for agents to make money. So some of these banks, they keep reducing the commission. There is over control of the agents when it comes to incomes. And I think that's why that is the general definitely it motivates the agents, because now you find agents, some agents preferring to serve certain banks are not interested in serving certain banks because of the commission. If a bank has got a bank which has got good commission, because you know there is liquidity is also limited. So if an agent, let's say, he has got 4 million, he gets the customer of a bank A, which is giving a commission of maybe 200, and he knows that there is a customer of bank B, which bank B gives maybe a commission of 1,000. This customer of bank A will go to this agent, and the agent will tell her, don't have fraud. Just because he sees that if I serve the agent or the customer of bank B, I will earn more. So I think this agent, much as it's driven by the commercial banks, we need maybe another body which has got a different interest to control this, to control it. Otherwise, with leaving it only just with the commercial banks to drive it, whose motive is to make money, and the agents also motive to make money, we might see agents, a number of agents dropping off when the business stops being profitable to them. And I think that's what is. So we see that agents are growing, but there are some agents definitely who are also dropping off just because of the incentives. Now, you see, agent banking is additional business. Being an additional business, I think it was designed to be an additional business because of the raw returns that it gives. With the feeling that if you are just doing agent banking, you may not be able to break even. So that if it's an additional business, probably it is supporting the business, the other business you are doing, and therefore you'll be able to maybe to break even. But that has got some disadvantage also, because if you say the person is selling rice and is also doing agent banking, it means if the price of rice has gone up, or if rice is more profitable, you find them switching the capital from the agency banking to the rice. So those are cases where you go to an agent and he'll tell you that, I don't have fraud, but you find that actually the capital has been switched to the line which is more profitable, a business which is more profitable. So as the banks keep on reducing commission and the profitability definitely going down, I can see a situation whereby more agents will be dropping out, or they will not work consistently. They are switching their money from one business to the other, which is definitely will make customers lose confidence in agent banking, because if they are visiting a number of outlets and they cannot be served, they will definitely lose confidence in agent banking. The challenges that Eva highlighted, of course, are challenges facing the agents. System downtime, I think, is a major one for some of the banks. Even here in urban areas, you find that almost every day the agents are complaining of challenges of the network or being off. Then charges. The charges, there are two charges. The charges that are charged on the shared platform, I see in the research paper where they're talking of, where they're saying that when you go to an agent and you find has got about 7 POS machines, which is an inconvenient other than using one POS machine. The reason why these 7 POS machines is because of the charges. There's a lot of customer awareness about the charges. So when a customer comes and they say, I want to transact, I want to deposit money on, let's say, Absa Bank. And we tell the customer that, I don't have Absa POS machine, but I have got Stanbic POS machine, so I can serve you using Stanbic POS machine. And our customer will say, no, if you're using Stanbic, no. Let me move on because of the charges. And then there are also charges withdrawal fees. You realize that on agent banking, deposits are growing faster, or there are more transactions, cash deposits than withdrawals. Yes, generally, withdrawals are normally less, even in banks. But with agents, again, you'll find they are much less, and the reason being the charges, because of the charges, the withdrawal fees, because you find that these withdrawal fees are really high. And Ugandans, we do not value convenience so much. I think we look on the saving, how much I can save if I walk to the next ATM than transacting at the agent. Frauds, of course, these frauds. We have got the frauds by the fraudsters, but we also have frauds by the agents. For those of us who are doing a super agency, and then frauds, of course, by the handlers of these agents. The challenge we have with handlers. Now I'm talking as maybe as now the president of the association, that the agents we employ, because you see, agent banking being additional business, you find somebody was doing, maybe was saying rice. So these shop attendants in the businesses were the ones now that are handling agent banking, and some of them, their level is definitely does not really suit the agent banking, because agent banking is banking. It is somehow technical to some extent. So these handlers, you find they can easily be manipulated by the fraudsters, because their level and their capacity to understand and to get risk is one thing. There was a question about limits of agents. No, the agents don't have limits so far. They only set limits for withdrawals, that you cannot withdraw so much and you cannot deposit so much at a go. But we do not have limits that you should have, let's say, maybe certain amount of money as your capital or your cash holding. Then about the hard to reach areas where there is no power and therefore no internet connection. I think we haven't reached there, because it's hard to operate in such areas. But there are also many areas which have got power and internet connection, where you find no agents. So I think we first address those areas which have got the power and the internet connection. Then with time, we shall have to find maybe a way of serving those areas which do not have the power and the internet connection. But for now, it's a bit hard. That's why I'm saying that we need to review this policy of agency banking. Maybe the government has to have more interest, especially now with these programs like the price development model. Government needs to have more maybe interest in agency banking, and maybe there has to be a review of the policies that set up this agent banking, so that we encourage the agents to go to these rural areas, and also for sustainability of agent banking, as I talked about, especially regarding the incentives. I think that is it for now. Thank you very much.
Sorry, Patricia, you seem to be muted.
Yes, I was speaking to myself, sorry. Thank you, Benon, for that submission. Thank you, Michael, for that. I see, Bob, I see your hand up, but I want to delay it and have Michael speak. Then just after Michael has spoken, then I will invite you to speak to us as well. I hope that that's okay for you, Bob. So Michael, I want to hand the floor over to you. There are questions that have been submitted or issues that have been spoken to by the previous speakers, which I want to believe you'll also speak to. So please unmute yourself and then speak to us as regards what we have heard from the presentations. Thank you.
Great. Thank you very much, Patricia, and all the moderators. I'd like to thank Mr. Benon Bahemuka in a very special way for spearheading the formation of the Agents Association of Uganda. That is a very key element, especially in enabling us build collaboration. And as you might have seen, Benon is a seasoned banker. He's mentored thousands of bankers who are driving financial inclusion. And I'm proud to say that I'm one of his students. So thank you very much, Mr. Bahemuka. And ultimately to FSDU, UCU, and UBA for this very interesting research. And to take on right from the last submission that came in from Mr. Bahemuka, especially in relation to how do we use the government programs to drive financial inclusion. And my thinking, as was submitted in the report, is that how do we build a financial inclusion program so that all the elements, all the projects that support financial inclusion are then placed into one basket, which is in this case a program. And so you'll then find projects such as the parish development model, ultimately supporting the financial inclusion because it then helps to create demand through enabling people to be able to venture into productive economic activities. And ultimately that would then help the 39% of Ugandans who are involved in subsistence, whose life is basically subsistence. And so that is a critical element, which at policy level, I believe would be helpful. I'm glad the representative, the colleague from Ministry of Finance was spot on in terms of the different government programs, government projects that are being done to drive this particular agenda. But then ultimately, the issues of agent distribution also touch on areas that have the largest economic activity. In Kampala, for example, in the central region that hosts the capital city of Uganda and key administrative centers of the central government, you have over 50% of the agent network concentrated here. And then you have the north that has the least distribution currently at about 9%. And so ultimately, we need to be able to focus on extending the financial services to the rural areas. The urban areas account for about 25% of Uganda's population, while the rest of the population actually resides in the rural areas. And so we need to be able to focus on driving access to financial services in the rural areas. And agency banking, the agent banking company will ultimately take lead in being able to drive financial inclusion in the rural areas through the creation of financial services hubs. And that we believe will be able to act as the glue that ultimately attracts lots of economic activities through development of unique use cases that are able to respond to the needs of the poor. For example, we have the capacity to support with cashless payments, particularly the merchant payments. We have the capacity to drive micro saving solutions. We also have the capacity to drive the micro insurance activities across the different rural areas. And we believe that amongst our different services, will be able to ultimately support the growth of financial inclusion, and in a way be able to reduce the distance that the customers walk to access financial services. And ultimately from the research, one critical element that came up was that there's a direct correlation between availability of agents and the growth in the customer numbers, and also the growth of account activity. And so the financial services providers, this provides them a cue in terms of how do you use the agents to drive account acquisition? How do you use agents to be able to keep the customer accounts active? And I believe that was quite a very important revelation that came from the research. And glad to note that ABC is taking lead in driving an industry account opening solution that will be able to support different FSPs, financial services providers, to be able to enable their customers to open accounts. And so that is a very critical element. But then ultimately, at Agent Banking Company, as the first interoperable platform on the African continent, there have been significant learnings along the way from the time we launched in 2018. And we're glad to note about the issues that relate to fraud, that we've been able to build an industry solution called Fraud Guard that is able to help the banks particularly be able to identify some fraudulent trends. And we believe that should be able to support, ensure that the agents are able to work quite seamlessly, and that those that have bad intentions are then rooted out. The other aspect, like my colleague Christopher Sengendo had earlier posted on the chat group, is the agent insurance solution that is able to help agents manage risk. Especially we've had cases where an agent goes to the bank to purchase float and they are beaten, they are injured, and some have actually lost life. And so we believe that the agent insurance solution will be able to support alleviate such issues. But then ultimately, the success of agent banking lies in the agent being happy. And so, like Mr. Bahemka did mention, it's critical for the financial services providers to ensure that the agent is well compensated, because ultimately, if they're not well compensated, then there will be an impact in terms of what customers, or whether they'll be able to continue doing the agent banking business. And so that is critical. It's not a surprise that 94% of the agents did indicate that their motivation for being an agent is to earn commission. And so that is a critical element that we all must be mindful about, so that we can be able to drive financial inclusion. The other critical element which has really impressed with from the research is the employment of the women. And like you've seen in different research studies, digital financial services such as agency banking, mobile money, have had a significant impact on the financial empowerment of women, and also to be able to support the girl child. Like people have said, once a woman is empowered, it's a nation that is empowered. And we normally see ripple effects in terms of improvement in the nutrition, improvement in the education rates of the girl child. And so this is a very critical element. And ultimately, it is able to support in terms of enabling the women and families have a certain level of resilience to be able to absorb certain shocks that come with certain key economic disruptions. Thank you very much. Once again, to UCU, UBA, FSDU, thank you so very much for this very wonderful research. Thank you.
Michael, for your submission. Well noted. Ladies and gentlemen, we are getting to the session of Q&A, and I want to use the next 10 to 15 minutes to open up the discussion. The rest of us on the call this afternoon. Bob, you had your hand up, and I had promised to give you a chance right after the last panelist, Michael. Please unmute your mic, but for the rest of the audience, in case you have a question, a burning question, an issue that you need clarified, please raise your hand or post it on the chat, and we'll pick it up and have responses given to you. Thank you so much. Allow me to invite Bob, whose hand was up earlier.
Thank you, Patricia. I want to go. Thank you. I want to thank the rest of the presenters. I want to move to another meeting, but I want to say this. We know that some districts, such as Buhweju, Namayingo, they don't have tier 1 and tier 2 commercial banks. And in order to, and this has, I mean, it hampers the business for agency banking in the sense that an agent, after, when he gets the money, it takes him time, for example, a person from Namayingo to take them, to drive and take his money to Jinja or Mayuge. So in that, the government is amending the MDA Act in order for tier 3, which are almost well spread to such areas, also participate in agency banking. The bill has been finalized, and very soon I think it will be tabled to cabinet for cabinet to pass it. I wanted to give that information, and in that, it brings competition for commercial banks for tier 1 and tier 2. Hopefully, they will enable agents, or they will, in this, when the competition increases, it will encourage banks to compensate agents better than what they have been doing. I thank you.
Thank you very much for that. And you have very important information you've shared about the undergoing work to amend the MDA Act. We look forward to that completion. Michael, your hand is up, was up. Do you want to say something? Mbusa.
Sorry, Patricia, it was a reaction to Bob's
Okay.
owners actually applauding him. Thank you.
Okay, thank you. Are there any other questions from the rest of the participants? We want to utilize the next 10 minutes just to close off, and we'll be sharing with you the report as well as the presentation, as I earlier mentioned. I don't see any hands on my side. Okay, Bob, you have posted your request to leave. Thank you for your time, Bob. And you are free to excuse yourself from the meeting, but we thank you for joining us and your submission. Jackie, your hand is up. Please unmute and speak to us.
Yes, Patricia, thank you very much. I realize since we have 2 or 3 minutes, I might as well add my voice to the discussion that has been on the floor. And I just want to thank Eva for the presentation and for the panelists. Those insights were quite helpful for this study. And maybe for everyone on the call, I was just thinking as we leave this call, I had a few issues that I wanted us to think about, either for future studies or for government institutions or regulators or any stakeholders, even development partners, to think about as we leave this study. And the first has been around supporting government in its social protection and policy programs. We all know that government right now is struggling, and there's actually a study that is going on to see how best they can support the vulnerable who receive social protection payments, either monthly or quarterly. We all know that especially the elderly some of them have to travel long distances to go to the payment points where these social protection payments are being made. And there are discussions on how can we make these payments easy to access, either through mobile money or through banking agents. So as we leave this discussion, I thought this is something that we can do. How can we leverage the agent banking network to support government social payments? Also closer to something that Michael mentioned and also Eva mentioned about employment of women, it would be good for institutions and academia as well to consider carrying out a study to see if having more female agents or increasing the number of female agents, if it has any bearing to increasing financial service access for customers. Studies outside Uganda have actually shown that some women, especially those in the rural areas and those who are illiterate, don't feel comfortable going to male agents to transact because they don't feel confident. They also do not feel secure to have those personal discussions with men on their own. So it would be good for us to see if having female agents or increasing the number of female agents out there does increase access to financial services, especially for women in the rural areas or women who are not educated. Again, we know that Bank of Uganda and Ministry of Finance are working to set up a national switch, and there are different discussions on how best this model can be in terms of efficiency, but also making business sense for the banks. We think that since there's already a network that is in place, like an agent network, how can we ride on that when developing the national switch so that banks don't have to invest in costly infrastructure, developing separate systems when we do have something similar that can be, just improved upon in order for us to have a national switch. So those are discussions that can be taken forward we do have so many stakeholders on this call, and I think it would be important for us to think about these discussions as we go forward. Otherwise, thank you very much for all the institutions that have been represented. Thank you for your insights.
Thank you, Jackie, for also pushing us to some of the topics that we can use to undertake research on. I'm sure the team, Eva and her team, have taken note of that. I want to give one last opportunity to Ismail Kengo. I see your hand is up. You'll be our last participant to make a submission, then we'll bring this meeting to a close.
Thank you, Patricia, for the opportunity. Mine won't take that long. Mine is simply a clarification to submission made by Mr. Bahemuka Bena. In regard to charges, he did say that you go to an agent, probably you are a DFCU customer, and the agent pulls out a Stanbic machine to serve you, and you say, I don't want to be served because of charges. The clarification here is actually the charges that are happening at those agent points are by the banks that own the customer, the issuing banks, not the acquiring banks. So the agents should not in any case say, the customer should not in any case say, don't serve me using Stanbic machine because Stanbic is going to charge me, is going to charge me. The charges are actually applied by the bank that owns the customer. If I belong to Bank A, I go to an agent who has a machine of Bank B, the charge you see there on that receipt is actually being charged by Bank A. So I think as a way to drive agent banking, probably ABC should be looking at how do they harmonize the issue of charges. The fact that people are not charged when they go to other channels like a banking hall, how do we harmonize the issue of charges and deposits by different banks? Thank you, Patricia.
Thank you, Ismail. I think going as a way forward, now that we have the Agent Association, I think there has to be some kind of collaboration with the ABC as well as UB and the member banks to just see how we address some of the concerns that have been raised, but also help improve and grow the agent banking business. As well as also implementation of some of the recommendations that have come out from the research that we've just had. Ladies and gentlemen, I want to thank you for your time this afternoon. Thank you to our presenters, our speakers, and to yourselves for making the time to join and be a part of the discussion. I want to, Michael, is that an accidental hand?
It's an applause, it's a round of applause, Patricia, thank you.
Okay, thank you. Thank you, everyone. I want to bring this meeting to a close and wish you a good evening. And we look forward to contributing and supporting each other as stakeholders to grow the agent banking business in Uganda. So that is it from us, and have a nice evening.
Thank you.
Thank you very much, Patricia. Thank you, everyone.